This week's federal budget put a lot of emphasis on renewable energy, and it's probably the sort of thing that you hadn't ever thought about, either in general or specifically as an investment. What does it mean for you? How can you use it in your portfolio? That's all coming up. This is Make Better Wealth Decisions, a podcast about financial blind spots, decision making, and how the reality of higher rates, global tensions, and tariff instability impact your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto. My guest this week is Mustafa Bukhari. He is the national team lead for wealth solutions at Skyline Group of Companies, and it's a pleasure to have you. How are you today?
Oh, I'm doing great, John. Thank you for having me today.
The goal for today, for me at least, is to unpack how clean energy fits into Canada's future, and especially with regard to solar and biogas. And we just had a budget where we talked about that. So I thought it would be timely to get you on. You are a representative of a company called Skyline that has a clean energy product. And so I thought that would be a great way to dovetail the news of the week with a guest this week. So with that out of the way, could you please provide an introduction to the asset class? What is it? What is clean energy? Why is it important?
Yeah, absolutely. And when we think of clean energy, I feel like people just immediately jump to ESG, right? When it's definitely more than that, right? It's renewable in infrastructure, right? It's trying to invest in sources of renewables that is going to be sustainable in order to keep up with the demand that is going to be placed on the grid in the coming years.
This is a concept that has been around for a while. People have been talking about clean energy for at least a generation. Why is it especially of interest to investors in 2025?
Because, Canada's power grid, it's rapidly changing, right? I mean, the federal strategy is calling for something like 140 to 190, gigawatts of new clean generation by 2050. We have to understand, what's leading the charge. And what we're seeing is it's the electrification of transportation. We see the EVs and hybrid vehicles out there. We're seeing buildings are moving towards electric heat pumps and water heaters. More importantly, it's the industrial processes that are currently using fossil fuels in facilities that are running 24/7. They have to migrate over, right? So the demand is both continuous and large scale to the point that, will require something in the ballpark of 2 to 3 times current capacity. And so then the question remains, how do we keep up?
Tell us maybe at a very, very, very short high level what the product is, but why did you launch this product? What gap is it trying to fill?
Skyline is a real estate and renewable infrastructure investment management firm. And so, our philosophy is very simple. It's to invest in hard assets that cash flow, which is why we got in the business of real estate. However, our investor base, we're accustomed to, the income that we would provide through yields on the real estate side of things, but they started to ask us questions about what growth mandates do you have? And we were exploring solar at the same time within our assets, taking advantage of some of the FIT contracts that the government had put out there. But essentially, with that investor interest in something more growth oriented, we thought it would be a good time to enter that renewable infrastructure space, taking advantage of government contracts, their feed and tariff contracts that they offered out here in Ontario, to launch a product that would provide that growth for our investor base. So really, this was, the genesis of the Clean Energy Fund was really born out of our investors' need, but still following that same philosophy of investing in hard assets that cash flow.
Yeah, and it seems as though there's some wind in the sails, right? So with the budget from Tuesday, a lot of money is being spent by the federal government to build up our infrastructure in various shapes and sizes and forms, but also with regard in particular to making Canada a superpower with regard to energy in general, but that includes clean energy. And it seems as though there's a real push toward that. So the timing, if anything, you were maybe a couple of years early, but I think now, it's late 2025 and there's a clear, I would say, public consciousness toward what you're offering as being something that's a viable option that people will want. And there's some credibility that comes with it by having some public policy support where you've got the federal government now as well, saying we'll put some money toward this. to make sure that we can build it out. It's a security issue, but it's also a way to generate jobs for the economy of the future. Any thoughts at all about just where the industry is going in terms of what we might expect in the coming years?
Absolutely. So I've noticed that anytime that, the government is looking to achieve a certain objective, they can't do it on their own, right? Like they need to enlist the private sector. And in order to get, help from the private sector, they have to come up with the right programs and incentives in order to get the private community to really act and achieve these objectives. If we are trying to achieve our clean energy objectives by 2050, well, how are you going to incentivize us, right? How are you going to incentivize the private sector to do so? So no different to what they did about 10, 15 years back with the feed-in tariff contracts on the solar side of things. What we are seeing today is battery storage, right? So we're seeing new contracts that are coming out with battery storage so that they can incentivize the private community to get involved and that we can help to build out this infrastructure. Because as the FIT contracts were very lucrative in the early days, RESOP FIT 1, 2, 3, battery energy storage is going to be a replay of that.
So let's talk about the two main elements of your strategy, that's solar and biogas. Why would you say those two elements are complementary in terms of what an investor might want?
Yeah. So, looking at, again, the underlying philosophy of hard assets that are cash flowing, we'll talk a bit about biogas first. Biogas is just an interesting asset class. It's a very fragmented marketplace right now. Like we haven't seen that consolidation within the industry yet, which is why we got into the space, is because what we can do is we can continue to build up, the capacities at these various biogas plants. And then, of course, probably, sell it to, another utility provider out there. But what's really neat about biogas is that it does have multiple revenue sources. And so we're doing our part in the community. A lot of municipalities, they, struggle with, waste collection and diverting a lot of waste to the landfills. When, what we do is we have these tipping fees and contracts with municipalities to sort of collect that green bin waste. For me out in Milton, it's, on a Wednesday, I get that nudge from my wife, Wednesday morning, put the green bin waste out. But essentially what we do is we collect that green bin waste and we're diverting it to our plants. And, we're turning it into renewable natural gas. Then we're adding a new capacity to the plant where, depending on where the rate of RNG is relative to the rate of electricity, to create electricity from that same process. And so now we have a revenue source on RNG, through our FIT contracts, we have the revenue source on electricity. But then there's this byproduct that's created from this entire process called digestate. Digestate essentially is organic fertilizer that we then resell to our farming community partners out there. And so then we've sort of created this beautiful closed loop cycle, where, farmers are growing their crops, we're consuming the food, creating waste, turning it into energy. And because we own those environmental attributes, we're getting carbon credits that we can then sell on the open market as another revenue source. And so, we find that our investors really do appreciate the portfolio because it is carved up into various revenue sources. Solar was the bread and butter of the portfolio. I would say, 60% of the portfolio revenues are driven through solar. We are one of the largest providers in Ontario, owning 80 plus assets spread across Southwestern Ontario. So the solar philosophy is simple, right? The sun is shining and, we're able to produce that, turn that solar power into electricity and feed it into the grid. And because we own that connection point into the grid and we have these feed-in tariff contracts through the provincial government, on average, we have about 8 to 9 years left on those contracts. And so it's that predictable revenue stream that we have created within the fund. And then we're able to reinvest back into the portfolio and go out and buy out, more solar assets. And what we're seeing today, it's actually more accretive in the portfolio to upgrade the existing panels on our assets, because as technology improves, we're able to produce more kilowatts on that same square foot by replacing those panels.
So we'll talk about the investing thesis in a moment. You've touched on it a few times already: hard assets, predictable cash flow, stable, so forth. But before we get into that, I wanted to go a little bit further onto the discussion about just where the industry is headed right now. Do you have any number? I don't know if you, and you may not have it off the top of your head, but statistics on what's new, what the prognosis is for the clean energy industry. You know, what are the growth opportunities? I don't know, repowering, recontracting, battery storage.
Yeah, what we're noticing right now in the industry is, impact funds, and what ESG was, 10 years ago. We're seeing impact funds emerge today. Looking under the hood within these funds, it really does come down to infrastructure and renewables. I think battery energy storage really is the future, right? It's to understand, what does the grid load look like during the day? What does it look like at night? Where can we store energy and, resell it at a higher price? In my opinion, it really is working with various groups out there to identify, places to invest in the infrastructure.
It's fantastic. You've got the sun shining behind you, and it's funny. It shines off the building, and it makes a very clear point about solar energy because you've got the sun right there. Making it really really good for your talk. Yeah, it's probably better if you lean in a bit because otherwise people won't be able to see you.
That's right. It's gonna block me out there.
There you go. It's funny.
Well, now it's not a virtual backdrop because
that's how you know. Yeah, exactly. Good for you. That's a great way of making the point. Federal and provincial programs to support the initiatives that are being undertaken right now. Can you tell us a little bit about them? Anything at all?
Yeah, absolutely. We're working with the IESO right now in terms of the battery energy storage contracts, which is very similar to what the FIT contracts were a few years back. What's really interesting is because people often say, well, what happens if the political parties change? What happens if we suddenly change our tune and we divert somewhere else? And now what are these contracts really worth? And so working very closely with the government, we do build in make whole provisions within the contracts. And so that, if they were to decide to cancel the contracts, they pay till the end of the life of the contract. So, that does provide a bit of security, not guarantee, but it provides security ultimately, right? Because you still do have to generate the revenue by operating the asset. And so I find that, building in make whole provisions, again, it really does incentivize the private sector to jump in, both feet in, to really invest in these opportunities.
So as a portfolio manager, when I talk to people about we should be looking at different asset classes, you should be thinking about how they correlate with the asset classes you already have. What are the risks? What are the returns? What are the limitations? What should you expect? What are the attributes in terms of maybe a little less liquidity, maybe a really strong cash flow, maybe some tax preferred, return of capital or what have you, and the way you do things. So there's a number of different attributes that might work for some people and actually probably work for most people. And I think actually, ironically, especially for relatively conservative investors, I think of products that have a regular cash flow based on a wide variety of a number of pretty solid contracts that are not going to go anywhere. You're getting a whole slew of different income streams that are being put together that are giving you something. I'm wondering if you have any thoughts with regard to the portfolio role for a product that has a stable, predictable cash flow. What would a renewable energy product look like in a portfolio? What would its role be?
Yeah, great question. Because when you ask that, I think about, asset location strategies, right? Like what type of account should I be holding this particular investment in based on the investment's characteristics? The nice thing with our REITs is, it generates, as you mentioned, return of capital. And so it's a very tax efficient form of distribution and really good to hold inside of a non-reg account or a corporate account to take advantage of the CDA benefits of investing in a corp. When we think about a growth fund, the TFSA accounts obviously come to mind, right? I mean, those are just such phenomenal account types that, the government was able to introduce. And I think we have contribution limits on an individual basis. If you haven't used your room, it's over 100,000 now, right? And
102,000, yeah.
102,000, that's right. Between, two spouses, that's 200,000 that you can invest in a product that's growth oriented that you can then, when you want to withdraw the money, tax free. I find that, growth product like this, that's not paying out a distribution would be best held inside of a TFSA account. And, oftentimes we do get asked from our investor base, when will it pay a distribution? And the reality is, we could pay a distribution, but who wants to receive, 1 to 2% in forms of a distribution? It's not really an income product. It's not designed for that right now. There's so many opportunities that the revenue that we generate, we want to go out there and we want to either, grow out the capacity of existing assets, or, we want to go out and buy new assets. Like, there's just so many accretive opportunities. And we're seeing that just to replace the panels, we're driving IRRs between 15 and 20% on a per asset basis. Whereas if I'm going out and buying an asset, maybe it's closer to 7.5%. And so, what we're trying to communicate with our investor base is it's a growth product so that we can continue to drive returns. And, the return profile today sits in about, 9 to 10%, which I think are, fairly decent returns, but we're just getting started. The fund is close to a $500 million fund. You grow it up to $1 billion, you start to attract institutional audience members out there. And, for those early adopters that are getting in today, I think they're going to be the biggest benefactors 3 to 5 years from now.
Yeah, and it's funny because I tell people that for renewable energy, they should be expecting a return that's closer to 7 or 8% because I'm, fundamentally conservative.
Yeah.
And that is growthy. But the irony is that products such as yours are frequently rated as being medium risk. And that's because they don't bounce around a lot. Like, the returns from one pricing to the next, whenever the net asset value changes, even if it's only quarterly, it doesn't change it doesn't go up or down by a ridiculous amount.
Right.
So very low variability and fairly stable positive variability.
That's right.
And I think that's the sort of thing where, if you're very confident that 91 days later, your portfolio will show a higher net asset value in your renewable energy product than it was the last time you checked, that's comforting for pretty much everyone. And I think that's especially comforting in a world where so many other asset classes are really expensive. We were talking about the so-called everything bubble. When you look at how expensive real estate is and how expensive certainly securities in general and U.S. securities in particular are, there are a lot of other ways that you can build a portfolio that a lot of people don't think of. There, a lot of the traditional thinking of portfolio constructions is still stocks, bonds, and cash.
I know.
And what I'm wondering about is, what do you think would be a suitable allocation in terms of a percent into just a clean energy strategy? What percentage of a person's portfolio do you think should be allocated? Could be, if you're inclined to use it at all, what percent do you think would be appropriate?
That's a really great question, right? Because as you know, the asset allocation model has to evolve, right? Like, it is no longer equity fixed income, right? And so when I look at it from a REIT perspective, it's like, let me trim off a bit of, that fixed income piece to replace it with the REIT position. But when I think of a renewable infrastructure fund, I really think of it more so from the equity piece of a portfolio that you could somewhat replace, because again, equities is the source of growth of a portfolio. And that is the exact characteristic that, a renewable infrastructure fund would provide, is that level of growth. But more importantly, I think, it's the decorrelation to the public markets, right? It's that decorrelation to external factors out there that is really, how this portfolio is able to stand on its own 2 feet. What are our risk factors? Like, you have to understand, so what are the assets and what are the risk factors, and how are you mitigating the risk factor? And you saw, the sun is shining, which is fantastic. So really, for us, it's, when the sun is not shining, right? When I came into the space, I'm like, oh, so you're telling me that if it's cloudy, then we can't generate solar. But actually, that's actually not true. So even if it's cloudy, we're still going to generate solar energy. The challenges would be, when it's snowy, but that's why we have a team out there that are monitoring our assets 24/7, because if we see that a certain asset is not generating to what its capacity is, we send our individuals out on site. And oftentimes it's because, okay, maybe there was a bit of wind, and so it kind of shifted it a bit, or maybe there was some snow on top and we require some snow removal. So the great thing about solar is that, we have 100 years worth of weather data to look at and extrapolate. So that's the predictability. Now, in terms of, the actuals versus what we're predicting, that's where some of the variability may come from.
And then in terms of an allocation to a portfolio, To me, I think something like, say, 5 to 10% makes sense. I don't know what you think, but anything less than 5% is almost not worth it. And 10% it's getting a bit, it's a bit nichey. So, I don't want to go more than 10% into something like that. But, what are your views? This is, again, the point that I would want to make is this is a non-correlated asset that has strong single-digit returns.
Yep.
And low variability. And, if you can get good returns without a lot of risk and based on steady cash flow, that's extremely predictable. I don't know what to like about that.
I totally agree with that analysis, because I would look at, 20% being my privates, this would fall under an alternative as a private. But within that 20%, I want to identify at least 3 to 4 different, issuers out there, that I'm holding at a rate of, 5 to 7%. Because ultimately, you don't want to be concentrated, right? You want to have a nice diversification. And there's some great asset managers out there as well in Canada doing some phenomenal things. And so I almost want a little piece of, a few pieces of everyone. I don't want to over diversify, because I love what, Warren Buffett, talks about, diversification, right? Like you really want to do your research and really understand who the asset managers are, what's their track record, what are they doing, and do you believe in that story? And then you kind of go all in, right? And then you want to find, a few of those players out there, and ultimately that should make up the portfolio.
Perfect. Okay, so we're at the end. I want to ask you the one question I always ask people at the end, Mustafa, and that is this. The podcast is called Make Better Wealth Decisions. If it was up to you and you could offer some advice to people listening today to make better wealth decisions, what advice would you give?
Oh, that's a good one. To make better wealth decisions. If you are a younger individual in university and you're entering the workforce, I would say get into financial services, because there is no greater teacher in life than working in the industry. Selfishly, that's why I got into the industry, is because I wanted to understand, the wealth strategies out there. And I'm like, what better place to start than in wealth management? And so, for a younger demographic out there, I would say, get a job in the industry or pick up the CSE, the Canadian Securities course, in my opinion, through the Canadian Securities Institute. It's a phenomenal course. It's a phenomenal license to get, because it will give you that preview into the industry, and it covers so many different topics. If one topic resonates, then you can go down that rabbit hole. And so, I found that I got my real education after undergrad when I, took a few courses through the Canadian Securities Institute.
Mustafa, I want to thank you for your time today. It's been a real pleasure, and I want to wish you all the best in the future.
Thank you so much, Sean, and go Jays go.
This podcast is not to be construed as offering specific investment advice. Please consult a qualified advisor before acting. My books, Stand Up to the Financial Services Industry and Bullshift, are available online. If you'd like to meet to discuss how the topics in this podcast affect you directly, please visit my website.